Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 154. Today is October 18th. Still at all-time highs-ish, AJ. Things are trending in the right direction. How you doing? How the market's looking? Where do we want to begin today?
I'm doing well, and the markets are in an interesting place because we haven't gotten a new high since Monday. So Monday could have been our top reversal. You're looking right now at my S&P 500 chart, and you can see here I haven't gotten that confirmed. So that's why you see this current reversal to reversal line that I keep track of in a yellow zone. That means it's still live. It could actually go higher, but if I get a confirmation, if I see this line right here, which represents the 3-day exponential moving average, cross over this pink line, which represents the 5-day exponential moving average, that'll confirm that this past Monday's close was our top reversal. That'll be a big deal.
And I guess we're digesting the earnings that are coming in one by one that are kind of having an
Absolutely.
effect, and a little bit of economic news.
A little bit of economic news. I mean, we've still got the carryover from last week, which showed that the consumer price index, aka retail inflation, and the producers price index, aka wholesale inflation, the inflation, at the producers level, were a little bit higher than expected. And then just yesterday, we got our retail sales numbers, which also came in higher. So that brings up fears about inflation, right? We thought we had inflation under control. Do we? Or the other question is does one set of data points really make the data set? The Fed presidents will tell you no, because if you look back a couple of months from now, we got extremely low numbers when it came to inflation. So when it all is like, best fit trend lined out, could it actually be balancing each other out? You can't make big, medium to long term decisions on one set of data points. And just to throw in some more confusion of investors right now, you had your jobless claims, which is a weekly report that came out yesterday morning, and they showed that jobless claims were on the high side. But of course, there's also a whole bunch of data from the Milton and Elena hurricanes. When people are out of work, the first thing they do is they go and file for unemployment. So those numbers could be on the rise, not because we're having a overall systemic problem, but because people need a couple of weeks of pay, relief because of the hurricane down south.
So so it seems as if we're getting a little bit of good news, we're getting a little bit of bad news. We don't know which way to lean on: inflation, employment. It seems as if that's going to lead to a subtle move of any rates in the future, which is
Yeah.
like a quarter basis point, which is like not really gonna affect much, I would assume.
Yeah, it's interesting. And last week I mentioned that I read through the very boring Fed meeting notes from the last Fed meeting in September. And those meeting notes, despite being boring, did show a 50-50 conflict being discussed in the Fed, meaning there were quite a few Fed presidents that wanted to be hawkish and quite a few Fed presidents that wanted to be dovish. And I actually think that means we're at a good place. And I know that sounds counterintuitive, when there's arguing in the Fed, but for years now, it's all been about how do we control inflation, right? That was the focus of the Fed. And now the conversation is back to their dual mandate of, if we do this to inflation, it's going to do this to employment. I think that tells us that we're almost back after all of the COVID, up, down, supply chain, blah, blah, blah. It's finally kind of pairing out, and we're getting to a point of equilibrium with respect to Fed, which is why I think investors, you look at the Fed Watch tool, and sure, it says exactly what we've been saying for the past couple of weeks. They're saying that coming up in the beginning of November, which is the next Fed meeting, the Fed will drop the rates by another quarter point. And then in December, it looks like, the markets are already pricing in yet another quarter point rate drop for a total of a 1 point rate drop this year. And then it's probably, we're to the point where the Fed maybe will go up a quarter point here or down a quarter point here, but it looks like we're probably at our equilibrium point. So you'll notice that a lot of investors are now focused on this particular earnings season because, we were thinking more for the last years, how are the big people who control the economy, namely the central banks, manipulating things to get us through the COVID stuff, right? But that's now far enough in the rearview mirror that investors are now like, you know what? They're not going to be playing those games anymore, doing, huge brushstroke changes to the economy. Instead, it's actually now coming back to where I feel like it should be, which is how well are the companies and the sectors doing that are producing the economy instead of the people manipulating the banks. How is the actual economy doing? So there's this uber focus in this quarter on our earnings season, which is in full play at the end of last week and beginning all of this week, and it'll be in full play for like the next 2 to 3 weeks.
And so it's like the reality of a soft landing is like here because well, I mean, you never know when
You
you've
never
actually
know.
landed, but we've been landing fairly, we've been catching our trajectory at a good pace.
I
Which is
mean,
like,
yeah.
I think why some of these earnings are more important than not, right? Like
Yes.
we just got Netflix, which I don't know if it's a gauge of the economy. I highly doubt it. But it is a driver of one of the bigger indexes.
Yep.
And then you had a good earnings webinar this week, and
Yeah.
I'm curious if some of those insights are spilling into some of the things that you may be looking in the program, on a usual basis.
Absolutely, right. Dan Passarelli, who was on our show last week, did a webinar for everybody. And people can go check out the replay, by the way. If you didn't get a chance to register to see it live, or be notified of the replay, if you go register now, it'll bring you directly to the replay. So if you want to check that out, yeah, Dan was talking, and I got some great insights from Dan about different ways he likes to use the calendar spreads. And we're going to talk about that in depth in segment 2 into our topic of the week. But he likes to use calendar or time spreads in order to trade earnings. And he gave us some insights on, how to pick the right options for those calendar spreads, as well as what underlying companies and what patterns in their stocks should we be looking at in order to get it. And also the timing of it. I mean, he gave us a ton of insights. He also gave us a great offer to go even more in depth with him on that topic. So again, anybody interested in earnings plays should at least take a moment and register and check out that video replay that he created for us. But yeah, we got some great earnings insights on that. There's a lot of things going on right now moving the broad market, SIP. There's the whole thing about AI. That's a big player. And then energy has been poking its head, right? Because a lot of people now are spreading out their portfolios and, they're going into defensive symbols. Gold is at an all-time high again. Commodities are being focused at. The defensive positions tend to be precious metals, commodities, like oil, silver, all the things that are made into stuff. Or used, like in the airline industry, oil is the main cost for the airline industry, even more than the price of the planes. And then healthcare. Healthcare is a big player when it's time to put your money. And so we're seeing actually all those defensive industries getting some capitalization right now. We're not seeing the VIX be as high as it was, but I feel like, even though this Goldilocks situation of balanced inflation, balanced employment may be coming in for that soft landing, I think people still have just the tiniest bit of skepticism. And so money is really going into these defensive plays right now, Sib.
Yeah, I saw two kind of complimentary headlines this morning. Was this gold play? Gold keeps getting into new highs, and I saw a blurb that with the national deficit continuing to increase, there's a spillover of that into some of the gold. And then
That's right.
I'm looking at the notes here, and you have this this blurb about the Taiwan semiconductor manufacturing.
Yeah.
What's the story there?
So the Taiwan Semiconductor Manufacturing Company, TSWC. Now they're not traded on any of the American exchanges. They're traded on. I'm going to pull them up on CNBC. So I'm just going to go over here to TSWC.
Correct.
They're traded on a Taiwan Taiwan Semiconductor. I might have TSMC maybe.
Oh, TSMC, yeah.
I might have put in the wrong ticker into our notes,
Yeah.
but what's exciting about them is you can get an idea. Really, it's like the current indicator of the AI build out, right? Because right now, just like the internet of 30 years ago, the first companies that really benefited from the whole internet boom, which was, if you look at 30 years ago, it's what pretty much changed our economy from being a things producing economy into an information producing economy. And now we're going through another big change for our economy and for our world, which is the AI. The first thing that happens is you have to build it out. There's actual tangible pieces. And in this case, it's chips, right? NVIDIA, Apple, AMD is a movie theater. They all build out their AI infrastructure with chips, and the chips currently, despite the build out here in the States, that's going to take years before we can actually start showing product. They're built in Taiwan, and so this index, if I can pull it up, TSMC, I think it is TSMC. There it is. Yes. TSMC. Write that down. TSMC. I had a chart up this morning, and then I was dumb enough to restart my computer, so I might not be able to pull it up. But let's see if I can get that up here. I'm not going to worry about it. The scoop is that they're at all-time highs, which means everybody is in full force having their AI chips printed, despite conversations over the last couple of months that AI is slowing down or not showing instant profits. These companies are investing in the long term in these chips. And so, for medium to long-term plays, AI is still the place, right? That's where I'm going with that.
Yeah, and I have a personal experience this week because I upgraded my computer, and it's got one of those like clear glasses where you can like see inside, and there's this giant NVIDIA graphics card, and I'm like, okay, this is what the hype is all about, is the power within this block that I can physically see that's supposed to speed everything else up. So definitely leading the charge there in terms of industries, right? I'm assuming some of these AI bots need a lot of this power, right? And I'm seeing clips of that coming, hitting the streams
I mean, if
nonstop these
any,
days.
I've just now been back, about a year ago, I was playing pretty hard with ChatGPT, and then I got distracted for a little bit on some of our indicators and things where we were working here. But I've been in the last 2 weeks working with ChatGPT again, and the difference between 1 year ago and the ChatGPT of today is like the difference between night and day. ChatGPT a year ago didn't have access to the internet. It didn't have access. Like if you wanted to upload a document to ChatGPT to read, you were limited to like 5 pages. And now it's like limitless, which means, the hardware is being built out. I can, upload literally, all of our options data, which is millions of lines, right? If you think about all the different options on all the different stocks, every day we create millions of lines of data. ChatGPT just sucks it in, right? ChatGPT will suck in videos now and like totally read videos. So the power of this build out, I can't even imagine what future versions of these AI chatbots are going to be even a year from now, just to see the progression of this. 5 years from now, what is it called? Reaching singularity, where the AI chatbots are as smart as we are. I can't even doubt that that's not going to happen. I think some of these philosophers have said by 2040. I don't doubt it, man.
I don't doubt it either, and it's smart. And if you're, we're digging into it on our end because we want to utilize the technology to better our business. So that's kind of like if you're afraid of the future, embrace it, get in on it, find a way to use the tools. I did see, I have a lot of comic friends, and one of them was like, "Oh, should we be nice to should we be nice to automation?" And my response was yes, because they remember everything. They will literally remember everything, and I can only imagine in the future, like if you're like got an attitude with a bot or something, that there's something in the back end that's like aggressive customer, right, or something, and it'll always be able to log that. So my response was like, yeah, you always got to be nice to the robots because they're going to remember everything because it's logged. It's data.
It's data.
So we'll keep an eye on that. AI is definitely a common topic that we covered. However, the goal of the show, the goal of the program, is to help you guys, investors, viewers, audience members, subscribers, to become better investors, better traders, and utilize the power of options, specifically some of these premium selling strategies that if it's new to you, if the concept is new to you, AJ's got a great daily workshop where you can head on over there, learn some strategies. And then we've also got a new a links page with all of AJ's wonderful tools, whether it's getting access to the webinar that we talked about, his free indicator suite, which you're going to see some examples as we go through our pick of the week and our speed round. Hit that subscribe on the YouTube channel, TikTok, Instagram, learning more about joining the program, one-on-one coaching. So the link to this is in the chat. You've got all the tools there. Head on over, check out the webinar. We're going to take a short break, and we'll come back and talk about directional bias of different options trading strategies. So AJ's going to break that down. We're going to take a quick break. We'll be back. And for everyone watching, we are live. So if you have any tickers that you want AJ to run through, feel free to throw it in the chat, and we'll see if we can get around to it. Sit tight. We'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So today is options expiration. I don't know if that has an effect on what we're going to discuss, other than all the paychecks are coming in today, right? I know that that's a good way to look at options expiration, but segment for this session is directional bias of options trading strategies. What do you mean by that? What are you trying to educate us on there?
So I just wanted to review with everybody, right? You've got all these different option strategies, but it comes down to a little bit of a breakdown here. I'm going to go ahead and share my screen here, and just this is just a basis of kind of what we need to think about. So first of all, we have to remember when it comes to the underlying stock, right? It's going to do one of three things, isn't it? It's either going to go up.
Hold on, AJ. We're not getting access to your charts at the
Oh,
moment.
no, I want you to see a white screen. Are you
Oh,
seeing
okay,
my
okay,
white
okay.
screen?
Yeah. All
Yeah.
right. Now
So-
that we're just gonna clarify that. Okay, go
Yeah,
ahead.
I
Sorry.
want to just kind of have this white blackboard here, this whiteboard, I guess you call it. So stocks are either going to go up, they're either going to go down, or they maybe are going to go sideways. That's like the three directions that a stock could go, right? And if unless the stock has a bias, it's maybe a 33% chance it'll go up, 33% chance it'll go neutral, 33% chance it'll go down, right? And so when you're doing option trading strategies, the first thing you do is you kind of, depending on that directional bias, maybe it's more biased, like 50% it'll go up, whatever. There are strategies that people go to when they're trading the directional movement of stocks. And so if you think that it's going to go up, right, and it's not going to go sideways or down, the first strategy you should be thinking of might be a long call, right? Just buying a call option, because call options profit when the stock moves up. And so a long call kind of has this, at least on the in the money value, a profit and loss diagram that looks like this, right? It goes up at a certain strike price, then it just starts going up just like the stock, but it's at a cheaper price. So if you think it's going to go up, not sideways, not down, you might trade long calls, right? If, on the other hand, you think it's going to go down, well, then you've got this other type of stock option. It's called the put option, and it does the same thing as the call option, only in the opposite direction. So if the stock price goes down, then the put price goes up. In fact, I kind of drew that wrong. It's more likely that you would see something like this, where if the price of the stock goes down, the put option goes up in price, right? So that's your long put option. You would buy put options in order to profit if the stock was going down. But now a lot of people forget that if, what you're confident in is that it won't go down, right? But you're not confident on whether it's going to stall going sideways or go up. So what you're confident in is that instead of picking one of these directions it will go, you're more confident that it's not going to go in a certain direction, like it's not going to go down. It's either going to go up or sideways, right? And in that case, you'd reach for something called a bull vertical spread. That means that this thing is going to profit whether it goes up or sideways. So in those two directions, right, it could go up or sideways, and this bull vertical spread is actually going to work for you. So, options traders reach for that bull vertical spread when they can't decide whether something is just going to stall or whether it's going to go up. All they're confident about is that it's not going to go down. Sip, do you see that subtle difference? Instead of being confident that it's going to go in one direction, you're confident that it's not going to go in the other direction, right?
Yeah.
Okay, so last thing here, well, not last thing, there's the whole thing where what if you're just confident it's not going to go up, but you're not sure if it'll go down or sideways? Well, then you would use the bear vertical spread. The bear vertical spread profits whether you go down or sideways. So they would reach for these different strategies depending on if you're confident that it's going to go in one direction or you're confident that it's not going to go in another direction. And then last but not least, I want to remind everybody that there's those neutral strategies. So, for instance, if you're confident it's going to go neutral rather than going up or down, it's going to go in this third direction, then a lot of times what we aim for is this strategy called a condor, right? The condor profits if it goes in that one sideways direction. Whereas if it's the other way around, where you're confident that it's not going to go sideways, but you don't know whether it's going to go or up or down, that's when you start to aim for that strangle, right? That strangle strategy profits whether it goes up or down, but it doesn't profit if it stays neutral. So these are kind of contradictions as well. And so a couple of things to think about is if you can be confident on what direction the symbol is going to go, up, sideways, or down, you're setting yourself up for higher rewards, but also higher risks if it goes in the opposite two directions. Whereas over here, where you're kind of like hedging your bets, you're saying, well, I will profit whether it goes up or neutral, or I'll profit in this case with the strangle, whether it will go down or up. In this case, I'm going to profit whether it goes sideways or down. You're going to set yourself up for less profits, but you're also going to set yourself up for less risk. So everything in options, strategizing is a trade-off. So if you want to be, have a sure thing in two of the three directions, well, then you're not going to make as much profit because you're now increasing the probabilities you'll win, but you won't win by as much. You'll also not lose by as much because the chance that you'll lose is way less. So, these are the directional strategies. When you have a directional bias on the underlying symbol, these are the directional strategies you tend to go to first, and then you tweak accordingly. And the last point I'm going to make, Sip, is these don't include, right? This is all in the money values. These don't include what happens to an option when time passes by or volatility changes, right? We can make money with options just letting time pass by or also playing into the fears that investors have, which raise the price of options. And when the investors are confident, it lowers. So there's a whole nother set of option strategies if you want to start playing on those influences well. But a lot of folks start with this directional bias. And so make sure, like if you're saying to me, you call me up and you say like you want to chit chat with option strategies with me, great. But if you're seeing something go up, make sure you're resonating towards the first strategy that actually makes sense. I have people call me who seem very confident and they want to talk options, but they're throwing out strategies without the basics understandings, right? You can sound confident as much as you want, but make sure you have some of these basics around options trading in your understanding before you go forward with more advanced strategies like we do at Trading Trainer.
Without a doubt. And if you are kind of watching this and not certain, then becoming a member and joining the program is perfect because it is where you'll learn a little bit more of the details. But I know from doing the show and working with you, I've always
2 years
appreciated the way to look at it as insurance contracts. It's like you can buy stock and go up and make money. You can sell a stock and make money when it goes down. But then you have this wonderful options tools, I think 29 of them, 28, something like that, to kind of, layer into these other strategies to limit your risk, to increase profitability, to use time as a source of income, really. And that's the beauty of premium selling. So highly encourage anybody that's on the fence or wanting to expand to head on over to the link, watch the webinar, learn more about the program. And then stay tuned to actually see some examples, right?
Mhm.
We talk a lot about what can happen and what your options are, but I think everyone's favorite part of the show, AJ, is what's AJ looking at this week? What's
Yeah.
AJ's pick of the week? How can we take some of these tools and implement it? And so this week, your pick of the week is a new name, I think, on the board that we haven't really discussed, at least that I'm aware of, and that's InMode,
Mhm.
INMD. And so let's take some of those wild option strategies that you kind of just outlined, and let's put it into play with a real life example. AJ's pick of the week, InMode. What are you seeing? What's the opportunity?
All right, so InMode, let's talk about the company first. It's true. I get a lot of my signals and such on the technicals, right? I really do, as technicals and price patterns. But before I even plan out a trade, right? I always like to do what I call a soft data analysis, and I teach my program participants. It's basically an overview of the fundamentals. And if it doesn't pass that, as well as maybe I have a little blueprint I give everybody, it's called the 10 tests to make sure something is a good sideways channeler. If it doesn't pass those screens, then you don't even plan out the trade. You don't even model it. You don't even get to the point of following the technicals. One of some of my traders' biggest errors is that they're just picking a stock based on its price or something like that, and they're not, evaluating it thoroughly ahead of time before just trying to trade option strategies on it. So we need to know a little bit about the company. So InMode is an Israeli company, and I wouldn't worry about the fact that that's the case. There's skirmishes going on in the Middle East. That's actually, it is something that you should take into account and maybe hedge some things. But this company, I think, is set up in a way so that even if something happens and they have to leave Israel, they're still going to be a viable company. They actually focus on kind of aesthetical medical stuff, right? Specifically using radio technology to like help people eradicate fat in their body, right? And it actually is a strategy that works. It kind of kills fat cells without actually having to do things like liposuction and stuff like that. There's actually a huge demand in the world for this type of this type of product, and InMode has been quietly making inroads in this. But as you can see by looking at my chart, and I'm going to switch around my chart a little bit. I'm going to go to my Fast MACD, which is one of my free indicators, the 619.3. I'm going to go ahead and ditch my indicators that I use to analyze the broad market so that we can kind of get an idea of some trade signals on InMode. InMode passes my litmus tests for being a good channel, a good underlying symbol to trade premium or sell premium on. And so you can see that we've got this signal from about 2 weeks ago that told us to get into some InMode and trade it, on the bullish side. So that signal has come and gone. Unless you already acted on InMode 2 weeks ago, I probably wouldn't want to trade this long. Although the earnings are solid, it wouldn't be a bad stock to own. But I guess I'm looking for the next top reversal, SIP. And I want to make sure, especially with some of the current uncertainty in the broad market based on this earnings season, based on the presidential election and all that. When I see the top reversal on InMode, I don't want to just use my usual confidence building indicators to say, hey, that top reversal is solid. I want to validate this and verify this with some more conservative indicators because I really want to make sure that when it hits its top, that it then goes down a little bit. Okay. And so when it hits its top and I'm more than confident that it's going to go down a little bit, that's when I want to short some InMode, right? I want to short this stock. If I'm not with a margin account, or if I want to use some leverage instead of shorting InMode in a cash account, instead I could buy some puts. And the puts that I think I wrote down, let me see if I can look them up. Here they are. The InMode June 2025 $25 strike price puts. Those particular options that I just outlaid for you would act as a great inverse stock replacement. So if you short the stock, great. You'll make money every time it goes down. If you buy this particular put, which is deep in the money and far out in time, it'll do the same thing. When the stock goes down in price, this put will go up in price. So whether you short the stock or you buy this put option at a top, a very confident top, you'll be set up very well to make money on the stock moving down. And so, and I love the underlying symbol price of InMode right now, SIP. So if I can get it so that it actually, heads on its way down, I'll let it go down. And I can, again, I'm being a little bit more conservative with my option trading strategies. Either I'm going to let it go all the way to a technical bottom, or if I want to be more conservative, I could put kind of a trailing, not a trailing stop, but a trailing conditional, indicator or alert in there, so that on the first hints of a reversal, based on, trailing stop philosophies rather than technical indicators telling me about the bottom. Or I could even just set a, profit target. I could say, once I'm below $16 or once I'm below $15.50, pull the trigger on selling the put premium and buying the call protection, right? Because when you put those two trades in place, it's called putting a collar in place. It's an adjustment we do to a directional position. It basically puts brackets on this thing and makes the position self-adjusting. You could weather earnings, you could weather all sorts of market, shocks that would, and this position would self-adjust on you. So I want to let some movement go in the down direction, but then I want to place those trades sooner than later to create that collar, create that, income generating collar on this trade. So that's kind of my thoughts on InMode. If you did a couple of weeks ago get into a long position on InMode, whether you bought a stock or you bought a back month deep in the money call, then this top would be a great time for you to sell your call premium, buy protective puts. And if you happen to have protective calls in place right now, this next top signal would be a great time for you to go ahead and liquidate those protective calls. So wherever you are in the trade, let's look for this really confident top signal and let's take action on InMode.
Yeah, and it like that buy tick signal from your indicator.
Solid.
I mean, that was spot on. So if anybody's interested in grabbing access to that indicator, the link is in the chat. The link is in the scroll bar. Head on over there, get access to it, get it on your charts, because you're going to see a lot of these solid indications from it. So InMode, AJ's pick of the week, ticker symbol INMD. Personally, I like when we can find some shorts in these all-time highs, just because hey, I feel more comfortable writing, what is it, the bulls jumping, the bulls go up the stairs and bears jump out the window, right?
Yeah. Also, being in a short, coming back to, the whole Israel thing, being short InMode isn't a bad idea if, all of a sudden something happens in Israel and this company, has to take a break and relocate. They'll have to put all their focus on relocating the company or, keeping the company alive. So investors would react to that, and being short this, you'd be on the right side of that transaction.
Yeah, there's definitely some potential geopolitical risk.
Dude, what's happening in the Middle East?
With the videos that I see, even just yesterday, I think they killed the guy that masterminded the the October 10th or attack, and
There's this
it was very
presidential
graphic.
election. This presidential election here in the States, being, the polls are saying it's 50-50, and it's two completely different philosophies. So it's creating this vacuum. And Israel is taking advantage of the fact that, nobody knows whether they're going to get extreme support or, questionable support come, in 3-4 weeks from now. So they're taking advantage of they're out there cleaning house, right? With the blank check that they've got from the United States as far as defense system goes. They're obliterating Hamas. They're going after Hezbollah. Geez, next thing you know, you're going to hear about the Houthi. They're tired of the missiles coming from the Houthi rebels. I wouldn't be surprised if you start hearing about how Israel is cleaning house with the Houthis. And I've read articles about how Israel wouldn't be against, seeing a regime change in Iran. So they're taking advantage, and they sure are, cleaning house. But in the meantime, it's putting everybody on edge. And it's making a whole bunch of people, for generations mad at them. So
I could only imagine what our perception would be if we had missiles. Like any part of American soil had missiles, we would be like, for them, it's like no everyday business now. But in the grand scheme of things, it's pretty dramatic.
I mean, you think about what happened on September 11th, and then I just remember, because I was living in California at the time, working for Hewlett Packard, and I remember all of a sudden, twice a day, we were seeing fighter jets going up and down the coast in Silicon Valley, right, protecting our borders. And then, what happened in Afghanistan? We used some of the biggest non-nuclear bombs ever. I remember, when the U.S. thought that, wanted to retaliate, they were literally using the type of bombs that leveled mountains. And they were, going for all those caves that the CIA did for the Afghanis when the Afghanis were battling the Soviets. They were like, well, we're going to take out those caves. And they literally took out mountains with some of these bombs. So I could only imagine what we would do in the similar situation. But, Israel's always been that red-haired stepchild. We're getting off pace here, but the fact that InMode is an Israeli company by default, you got to worry about your investment on that front.
And we're not taking sides here. We're
No.
merely looking for opportunities to
Yeah,
to sway probability in our favor
correct.
using these beautiful options tools. So that's the breakdown for InMode. Let's move on to some of the pick of the week. Something a
Yep.
little bit more lighthearted. How about sneakers? Yeah.
Yeah.
Okay. Kyle from Houston, Texas wants to know, AJ, your thoughts on retailer Foot Locker, ticker symbol FL.
All right. We look at Foot Locker periodically. You guys like that one. Let's take a look at a year's worth. When was their earnings a year ago? November 28. So they don't have earnings. They're towards the end of, or even past the end of earnings season. I see what you're seeing. You're seeing that we got a bottom signal less than a week ago, or a little bit more than a week ago. Let's zoom back into at least a 6-month chart, get a better idea what we want to do here. So what are you seeing there, Kyle? Are you seeing resistance possibly at around $29, and maybe this move up to 33 was just a fluke for a month there ahead of this earnings season? I think you're right if that's what you're seeing, and I'm seeing that same reversal. We have tested resistance around this tested support around this $23 mark. Do some of your soft data analysis. Make sure you're aware of what the latest headlines are with Foot Locker. This is a retail company, but you can see that their earnings are very seasonal, right? We're coming up on the holiday season. Shoes are a thing. Yeah, I think what you're thinking of is, should I go long Foot Locker? I wouldn't mind it. Either you can be outright and you can buy a stock on Foot Locker and I would buy it in increments of 100 so we could do some option strategies on it. If we use that options lookup tool that we've got, I'm going to demonstrate it here because this tool is pretty rad. And I'm just going to use, last night's data. We've got data going all the way back now. If you look over here, we've got data going all the way back to the beginning of July. But I'm just going to use last night's data. I'm going to look at all the options, and I'm going to use this little function that only our options lookup tool has, which will show us the price components in terms of percentages. And so here's what I can do. Either I can buy the stock, or I want to go like, at least 8 months out. So I'm thinking maybe this June of next year option. And I want to find an option that's pretty close with this extrinsic value price component, around 5%. This guy doesn't have as much open interest. Maybe I would bend my rules, go a little less in the money. I could see going with this $10 call. So if I didn't want to buy the stock, if I wanted to use a little bit of leverage, instead of buying the stock closed yesterday at about $25, a little less. I could instead do this $10 call. It's trading at a fraction of the price. It's trading $10 lower at about $16.10. And this would act like the stock, but it would be at a cheaper price. So I could see you doing that as well, buying contracts of this June 2025 $10 call. Or if you wanted to, I could see you also collecting premiums right away, doing what we call a cash secured put. So again, coming to my options lookup tool, I could go back. This time I'm going to use an at the money option, and I'm not so concerned about price components. And so coming to Foot Locker, let's talk about the November 15 expiration. And I could use what you do is you pick what price you're willing to pay for Foot Locker. So if Foot Locker is currently right this second trading at $24.77, if you're willing to lock in that you buy it for $22.50, right? You could easily right now get 53 cents a share, right? 53 cents a share or $53 a contract, so long as you have that $22.50 ready. And this is good until November 15th. Basically what this said is, I'm going to give you $53 for every contract you agree to buy, for every 100 shares of stock you agree to buy at $22.50. And if it comes down where the person wants to sell you the stock for $22.50, which would be a great price, you'll get it. If it doesn't, you get to keep the $530 or $53 per contract. So if you wanted to make money right now and you're willing to buy the stock, which is currently trading at $24.77, if you're willing to pay $22.50 for it, get it at a discount from what it's trading at now, they'll give you $53 a contract right now today if you do this transaction. So that might be a way that you could get into Foot Locker, by making some premium up front if you're not willing, if you're not, so concerned about getting the stock right now. So you got all these choices about how you could get into this. You'd wind up with owning some Foot Locker or owning a Foot Locker substitute, and then looking for when you want to collar it once it's made some inroads. So yeah, I support what you're doing, Kyle, and I hope I gave you some options on what you could do next.
Yeah, I'm actually impressed with Foot Locker in general, moving more away from the retail spaces and doing a really good job on some of their e-commerce platforms, because when you go and you look for shoes, like, trendy shoes,
Sure.
there's not a lot of options, and Foot Locker still is a good leader in terms of having some of those brand names, and the online, the app experience is very seamless. So I could see, especially with Q4, right, holiday season. Yeah. So I like the logic there. So thanks for that, Kyle. All right, moving on to our second name. a name that we've kind of been looking at for the past couple of weeks. And Sean from New York, New York, wants to know your take on Citigroup, ticker symbol C.
Well, my big question for you, Sean, is did you do an earnings trade on this? This was before market open on October 15. So it was, the beginning of this week, Tuesday of this week, because it looks like if you did one of Dan Passarelli's calendar spreads, you probably, especially if you kept it an extra day or two, you probably did really, really well. Or if you do, what he explained to us is that he gets in the day before and he's out the next morning. And that could have worked out for you pretty phenomenally as well. So if you did one of those trades, kudos on you. At this point, let's make sure we got this signal, but it was on earnings, right? We got this signal that we formed a top on Citigroup. Let's let that shake out a little bit because we really haven't gotten, I guess you can say Thursday was a follow-through day, but I kind of want to make sure, maybe wait until you're trading down below this 162.50 number. I'm not sure. I just want more confidence. Remember I said on my in mode, I really wanted to be confident that I'll get some movement in the direction. I want you to be a little bit more confident than like the fast MACD on the earnings day. I'm not as confident about that end of day signal just because earnings day played such a factor into that signal, meaning it was, externally driven. It's not, I want to make sure I'm going to go down before I short this. But once I've got that confidence and once you've got that confidence, yeah, let's short Citigroup. Or I always like to think of the option. So let's the alternative. So the alternative, watch how I do this. If you have access to this options lookup tool, or if you want to get access, let us know. You put in all for your strikes, you put in the ticker symbol, and then you click show price components. Then what you do once the data comes up is you go about 8 months out. So I guess we're looking at these June options next year. And then depending on whether you're at a top or a bottom, in this case, we're at a top. So we're going to look at the put options. Just go down this column and look for the ones that are around 5% and do a liquidity check. Liquidity looks good as far as the bid-ask spread's concerned. So here's the one I'm going to recommend. If you don't want to short Citigroup, you could instead buy the Citigroup June 2025 $85 puts. And Citigroup right now is going for $63.97. If you buy this put, the put is going for $16.88. So in addition to not needing a margin account to do this trade, right? If you short a stock, you need a margin account. If you don't have a margin account, if you only have a cash account, you'll want to use this put substitute. But the other benefit is that this put substitute is including a little bit of price leverage, right? You're paying a lot less, and this will move dollar for dollar. So if the stock drops $1, this is going to go up $1 in price, but at a lower investment. So you get more return, more bang for your buck by buying this put. And then, yeah, just be aware of how low you go and then set up that auto-adjusting collar. That auto-adjusting collar is so fantastic, right? If the stock stays sideways, you start making incomes. And then if the stock goes up, your protective call kicks in. If the stock goes down, your sold put kicks in. It auto-adjusts. You don't have to worry about stop loss orders or any sort of mechanical. It's all passive. It's nothing you have to stay up at night, white knuckling, wondering if your trade is going to work the next day. Everything takes care of itself once you've got that collar in place. So just be prepared to apply that collar, once you've got some downward movement on the stock.
All right. That's Citigroup, ticker symbol C.
Love it. And I hope you took advantage of that Dan Passarelli earnings play. It looks like it would have been a nice winner.
Yeah, and we're still in the thick of earnings season, so plenty of opportunities out there. All right, our third and final name in the speed round, Tyler from St. Paul, Minnesota, interested in the 3M, ticker symbol MMM.
Scotch tape. That's what I think of when you say 3M.
Well, they consider this a discretionary, right? Because they do a lot of stuff, right?
They do. They do a lot of stuff. 3M, I mean, they're basically a chemical company. They're not just, they may in the retail sector sell Scotch tape, but their adhesive is what they're known for. Putting it on plastic is a side business for them, but 3M adhesive is in everything that you can think of. That company is B2B, all days to Sunday. With that said, earnings. So earnings is set for next week, October 22nd. What's October 22nd? Is that Tuesday?
That's gotta be Monday.
Is it Monday? No, it's Tuesday. And it's
Tuesday.
going to be, where is it? Right here. Let me click. There it is. It's before market open on Tuesday. So what Dan would tell you to do is, first of all, make sure 3M is a good candidate. So right now, looking at the previous earnings, he would tell you maybe you want to take a step back. But if we look at the last year or even 2 years of earnings, it turns out that it's actually not that big a deal to be in this during earnings. There's not, in other words, investors in 3M usually don't react too much on earnings. They did this last time. And so what might be good for you, Tyler, is you might want to go back and look at the headlines from 3 months ago and see why, kind of understand what was in the investor psyche when they drove the price up. And is that still present today? But if you wanted to trade this, what Dan would tell you to do, what I would tell you to do, is you want to do your calendar spread, buy your calendar spread on Monday, and then get ready on Tuesday morning to sell that calendar spread. And what you're doing is you're taking advantage of the fact that on Monday, investors will have been hedged to the hilt by buying options. And so this front month, like an option that's going to be expiring at the end of that week, the weekly option, if we take a look at, again, I can use my options lookup tool. Again, I'm going to narrow down my strikes, put in the ticker symbol, not necessarily interested in the price components for what I'm doing right now. I'm just looking at expiration dates. So I have an expiration date on October 25. That would be the one that I sell. And I've got a choice of selling puts or calls. And then the one that I would buy, Dan was going out a month. I've always said go out a little bit further. He was going to the November or December. I would say go with the January. I don't think it really, matters because you're only going to have it for a day. You use the same strike price, same type. So if you do a call on the one that you sell, you do the call on the one that you buy. And what I actually liked, and this might be something, I don't think it's uncommon knowledge. Dan talked about it during his webinar, and you should really go in there and register for that and see the replay because you want some more in depth. But he actually said split up your trade, the number of contracts you plan to do, between some of the out of the money options in either direction. So use your call options. Use these out of the money, the 140 calls maybe, or the 135, 140 calls and the 135 puts. So kind of do two different calendar spreads, bracketing where the price is currently. So anyway, you do that trade, you buy that calendar spread, and then you go ahead and sell it the next morning when the options investors take off their option trades. That front month option drops in price because there's a lot of selling pressures, and now you're going to be buying it back at that new lower price. So basically, you sold that option when it was high, and then you buy it back when it's low. And this back month option, basically your covering position doesn't change in price. So you're taking advantage of being on the correct side of that transaction. It's a brilliant trade, and you need to have Dan explain it even better. But basically what you're doing is you're selling when all the option traders are buying, and then when all the option traders are selling, you're buying. So you're always on the correct side of the equation, and you're setting yourself up for some profits. So again, that's what I think I would do. I would, do my homework on 3M, make sure I understand what happened in the last earnings season. I feel confident about very little price action on this earnings season, because the price action is kind of the gotcha with Dan's trade. But if you feel good that 3M is going to resume what it does when it usually does earnings, then I would say, if you're going to do 10 contracts, do 5 of these calendar spreads where your front month is October 25 and your back month is December 20, and do 5 of these put options where, again, front month is October 25 and back month is December 20. And you'll notice that the December options are going every $5. So you'll need to match up your strike prices with the front month options. I would do that. I'd be fat, dumb, and happy. 24-hour, less than 24-hour trade. Yeah.
And
that's an earnings play.
Totally. And if you want a little bit more detail on the earnings crush and the earnings rush, it's kind of like how I remember those
That's
strategies.
Exactly right.
The link to the webinar is in the chat. It's also in the scroll bar. So head on over there, sign up. You'll be able to get the replay right away. Some nice little content to head into the weekend with some nice earnings plays still on the calendar.
By the way, Tyler, thank you. Thank you for giving us that ticker. Sip, what I think I'll do is for next Friday, I'll trade this and I'll bring back the results.
For the crush or the rush or whichever one it is?
It's going to be a rush leading into Monday, and then on Tuesday we'll trade the crush. So I'll do the trade, and we'll come back next Friday and talk to people about what my results were.
That sounds like a plan. All right, everybody, stay tuned. We're going to
give you guys a reason to come back.
Some short-term positions opportunities, because I know we like to do the boring stuff that's consistent and timely. And
but earnings, how could you pass up earnings? It's free money.
Well, that's why people need to head on over there to that webinar, learn the strategies, tune in next week, and see how it went down, get some more details. So keep an eye on that. And that'll do it for the show for today, AJ. It's options expiration. All those premiums are coming home today, hitting the bank account. Heading into the weekend, heading into next week. Any final thoughts on what we should be keeping an eye on?
I'm going to be keeping an eye on the only final thought I have is go vote. Go get your early vote in so you don't have to worry about it, but go vote. It doesn't matter which way you vote, but do vote, and just watch your candidates. We're in our usual play here. If something's coming up for earnings, either you want to cash out of it or you want to make sure you've got your collar in place. Either one is a safe place, but just being long the position without knowing which way earnings is going to go, you don't want to be there. So either collar it or get out of it, get into all cash.
Awesome. Great advice to close things out. AJ, thank you once again for your time today. Thank you, everybody, for tuning in. Feel free to show some love. Hit that like, hit that follow, hit that subscribe button, and tune in till next week. We'll see you then, guys. Have a wonderful weekend, everyone.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh